Welcome to Momentum Monday. Today is March 1st.
It is, buddy. It's March 1st, and we're broke. Oh, no, you're not broke. You were short. You nailed it. Not only did you get out of the market, like some people did, I can't believe you're not living in New York with the money you made last week. I think you have done a great job. We're different, right? I'm a trend follower. I got stuck in some long positions, but that happens to me. You lose 20%. Now you got to regroup. So I want to talk about it from both angles. What you're seeing as a swing trader and what you saw. Go back through the S&P and what you did this week, because I know you had some big trades going into the week. And then we'll talk about the long term.
Yeah.
Let it rip.
I mean, definitely the market corrected pretty quickly. We saw some.
What? There was a correction? You're calling this a correction?
We saw a panic, definitely a panic last week with the S&P down 12 to 14% at some point.
Mm-hmm.
And typically, long time ago, 4 or 5 years ago, I wrote a book on corrections explaining that.
In English or Bulgarian?
Oh, in English. I don't have a book in Bulgarian, only English.
It was a good book. I think I helped you write it, but I'm not going to take credit.
On this one, you didn't, but that's a separate topic.
That's a separate story. Okay.
And I talk about the different stages of a correction, and typically stage one, we see a widespread swift sell-off like we saw last week. And typically during that first leg lower, Brad deteriorates significantly and we reach a momentum low. I'm not saying Friday was the low, even though the way we closed, it might be, but we're very close to a momentum low.
Momentum low, meaning exhaustion.
Yes.
Meaning people cooler, like the people will look at their accounts, accept their losses, try and regroup. There'll be more selling, but I agree with you here. Ivan, I think price adjusts faster than psychology. That's like my takeaway. And
yeah, absolutely.
Talk about momentum. The panic is happening. It's definitely not over because we're, but what was on page 10 is now page 1. Right. What was on page 1 for like in January, market's overvalued, but interest rates are low, stocks are going up. The virus was a thing in Wuhan and stocks kept going up, and I think people just got lulled. And now page 10 is page 1. Okay, so what did you do last week? Because I know you've been talking about Burpees. Did you put on some short position?
Not even last week. 2 weeks ago, we talked about the worsening market breadth. And when the market was at all-time highs, I talked how premium is so cheap that we should be buying some premium. And I do recommend it to my subscribers to buy some VXX March 20 $70 calls. At the time, they were like 40 cents. And I had no clue that the market will deteriorate so quickly. And at some point on Friday, those calls were worth more than $8. So 60 times above that. And
you have a few of them or no?
Yeah, I did. Yeah.
And are you probably cover them now, or you probably sold
them? I basically closed most of my position last week. I do own some Amazon still.
Some long Amazon.
Yeah, I bought some Amazon on Friday.
All right, so the S&P didn't quite hit its 200-day. Keep going.
Oh, well, it went below it, right?
Oh, did it?
Yeah, the S&P. You're talking about the Nasdaq 100. Yeah. And we hit a few. We had a few put options in Apple since last Friday, which also I had no idea that it will drop 20% in a week. So we were kind of lucky. Obviously, we exited too early, just because our goals was reached. We also had some put options in Planet Fitness, assuming that people get scared.
Very interesting because people won't go to the clubs. Okay, that was a great call.
And actually, we buy put options when the stock was right here, so much before it started breaking down. So yeah, that was a big move.
And that was coming from an all-time high. I mean, that's what's fascinating is this came from all-time highs. And I'll be the first to admit it. That just doesn't happen that often.
Yeah, I was looking at their stock and I was like super surprised. Like, oh, they've done so amazing. I mean, look at that 14 to 80, and it's really.
Yeah, well, it's lever. I mean, in the end, I mean, it's about foot traffic there, and if people don't
Yeah.
come, they're going to cancel their subscriptions, buy a Peloton. Things are absurd. Things are
earnings.
Yeah.
So this company will bounce because I don't think people will cancel their subscription if the virus lasts only like a month or two. And look at their earnings expectations. So eventually, this stock will come back near all-time highs. You just need to be patient, and this is true for many other stocks. So we were talking about the different stages.
I think I'm going to let the maiden just to clean. It'll be funny in the background while I'm at the hotel here in New York. So
yeah.
If you see a woman, if our 40 viewers see a woman, it's not, don't tell Ellen. It's just a cleaning woman.
Well, you have to explain that to her,
I'm explaining it to you, Ivan. You got my back here.
The other women that might dress,
What happens on Zoom stays on Zoom.
Yeah, and on YouTube.
All right, so now let's.
And of course, last week, I mean, if you're a super speculator, we saw any stock related to the coronavirus double, triple, and go 5x, 10x. I mean,
I was getting so many emails. Yeah, I put together a Corona list on Koifin, and people made a lot of money, and they were asking my real opinion. That was ridiculous.
For example, we traded this one, VXRT, which also can double and triple. And
not my thing. I kept telling people I'm not at my computer and talk to Ivan, but going into Monday, you probably don't have any. I mean, if I know you, you don't have any shorts on.
Going into tomorrow?
Yeah.
No shorts. I mostly cash. I own a little bit of Amazon for my clients. That's it.
Yeah. I nibbled on some Google, and let's pull up Google and Mac. Those are my two ideas that for the kids and myself, on Friday bought a little bit into the hole. I wrote about it the night before, and MasterCard. MasterCard really scared me on Friday, but hammered in the last half hour. I'm going to stick with this. I mean, listen,
go ahead.
No real China exposure. I mean, obviously, if people aren't out shopping, that will affect MasterCard. That's why I had a 20% pullback in a matter of. I mean, not that these things aren't overvalued, but I'll trade 20% pullbacks in my favorite 8 to 80 brands all the time. I may not keep my trade position. I'm still long, but I may not keep my trading position on for about 2 or 3 more days or tomorrow. But, you give me these stocks when they're down 20%, and it's like, I have to do this trade. It happens once or twice, or once a year. Yep. And so those are my favorite. I'm trying to, Ivan, just find companies that don't have China exposure, as little as possible, and are as pure a software play as possible. So I'm looking at stocks like Okta or Mongo. I mean, they've kind of stayed so strong anyways. So it's like nothing there for me to trade. But it's like the open source / companies are going to use these products no matter what. Slack is like kind of my spec play now in the space. But again, there's nothing exciting here. Kind of held in there really good during this panic. And then the other one that the sector that I'm looking at that got just absolutely massacred and deservedly so, is the freight forwarders and the logistics companies, which will bounce. Prologis is the biggest one I know in the U.S. So I'm eyeing that. But I'm trying to put together it's called Prologis. I don't know how to P-R-O. Can we spell the name? P-R-O-G. Yeah, that's it. So if you look, this is a massive logistics company, and you can see, down quickly 20%. So I'm trying to expand my view of what I see, happening. Some of these smaller logistics companies, or Prologis isn't exactly a full-on in Australia. I was looking through Australian indexes and European indexes. They're down 50-60% in the last month. So rest assured, price over psychology. We have page one news now. So the question is how long it persists at page one. No one can figure that out, right? Like none of us are smart enough to figure that out. And so if you are nervous, use the momentum rally that Ivan expects to lighten up and make sure if there's, we continue into a recession or bear market, that you're not panicking 6 months from now, because these things can go on for a while and wear people out, correct?
Yeah, depending on the catalysts that show up. So give me a minute to explain what I wanted to explain earlier.
Please, go.
So at this point, China exposure doesn't matter. I mean, this is a world problem. So that if anything, Chinese stock might actually outperform from here, because since that thing might be already kind of priced in a way. Obviously, central banks will try to stimulate the economy, and this is a catalyst that can cause a snapback rally. I talked about stage one of a typical correction when we have a swift first leg lower, which reaches the momentum low, which means a very large number of stocks make, let's say, new 20-day lows or go below their 50-day moving average. And then usually in stage two, we have a snapback rally, which retraces about 50% of that first leg lower. And then it'll be interesting what happens after that, because if the bad news about the coronavirus continue, then all the stimulations that central bank announce won't really matter that much, because people will be worried more about a vaccine or a medicine that can help them. So that might lead to another potentially leg lower, which might test the first momentum low and even exceeds it. In a really bad case scenario, we might expect like the S&P to pull back even to 260, which is where
love to see 260 as long as interest rates stay low. And the wild card here is, you've got the Trump kids talking about being 100% long. It's so like the chipping away. The markets aren't working perfectly as is. Everybody owns the same 500 stocks. You've got the president's sons tweeting that they're all in their 401ks just now. It's such bad behavior. And again, the markets that's the way the markets are. That's, it makes sense that Trump's all in on this market, so he's going to have the propaganda machine. But you can't make a bet based on Trump, right? You can make a bet, like you're saying, Ivan, based on the momentum that you're talking about on the 200-day moving averages, on trying to pick stocks creatively that have as little exposure to China as possible. Unless you really love leverage and risk, pick a full Chinese exposure. Look at the airlines. I mean, the airlines massacred.
Yeah, I mean, that definitely at this point of the correction, correlations are so high that stocks are going to move together.
But airlines won't bounce because of the exposure. You could shut down the airport. So if you look at the airlines, if you want a levered play to, I know this is going to blow over, you should look at the airlines, right? Or Carnival Cruise Line, like if you know this is going to blow over and I don't, that's how you make real money, because you're buying these things at like 2-3 year lows, and they have leverage, and insiders, will see that this passing, these will hop back right up into the resistance.
Yeah, when the recovery starts, typically the stocks and the groups that were hit the worst are the best performers in the first month of a recovery. And
what's so interesting, yeah, I agree with you, Ivan. What's so interesting is when the virus hit, it's just you had a month and a half to get options in this stock and wait for this kind of moment. It's not my style or not your style per se, but look at the payday over 2 days. You knew the virus was there. It was you know what I mean? Like in hindsight, this is an easy game for some people. This is why some people win all the time. My strategy is momentum. I don't have time to scout the market, but there's so much opportunity right now with this volatility.
Yeah, I agree absolutely. And many stocks are already trading at their 2019, 2018 lows or below it. And we're talking about stable companies like Verizon, for example. So there definitely this
correction is interesting
and will create some incredible opportunities.
What's the dividend there? Like 4%. I don't even understand. Yeah, that's interesting.
Make sure that you protect your capital and confidence, because if you lose your confidence during the sell-off, you'll be too scared to buy when the right time comes. And this time will come. I mean, it could be a few weeks from now, it could be 2-3 months from now, but it'll come. And typically in stage 3 of a correction, we see the indices make new low, but with a positive momentum divergence. That means that market breadth does not confirm the new lows, because some stock are just making a higher low and starting to turn higher. So there'll be some clear technical signs of that.
Yeah, there's going to be a rotation in this. That's unbelievable. I mean, you know, at 10 times earnings and a 4.5% dividend, there's going to be a lot of money flowing into these.
Yeah, and thinking from a macro point of view, this virus might even accelerate the adoption of robots everywhere. I mean, China had to close their manufacturing facilities for a month because of a virus. You know, why wouldn't they invest in robots and just automate as much as possible? So next time when the next virus hit, we don't need to close the world economy. So things might accelerate in that fashion. So keep an eye on the robotics and the AI ETFs and their holdings. They might be a new.
And that's why I did Google. It's like AI. It's all software. You know, they have obviously some hardware, but less than Apple. And you know, my AI play is always going to be a Google. My AI and software play is always going to be Google. When the markets are in a panic mode, they're the purest large software company. Okay, nothing fancy this week. I don't think people need to get fancy. I think people need to. They don't need new names. You know, big names are on sale. Like you said, if you're looking for yield, Verizon's rather interesting, and if you're looking for complete, you know, leverage to a recovery, obviously the airline blew up, and you could try that, or some logistics companies. And if you really are crazy and want to speculate, keep playing with the coronavirus stocks or coronavirus stocks, but that's silly. The play happened. I think if it's really serious, some of the bigger companies are going to have to put out, so, you know, it's up to some of these bigger companies to figure out how to do that.
Yeah, I agree. Look at this Alpha,
oh my goodness,
which they make masks. I mean, this stock went from 2 to 50. It's just.
It's amazing for people that do their work and use social media. Was that like, how did you find the stock? Just from screens?
Yeah, just based on momentum. Like I look at stocks that are up 4% on at least 100,000 shares each morning. Mm-hmm. And you know, they pop up, and you see, when you run that screen every morning, then you see themes, and then you see all the coronavirus related stocks, masks, vaccine are rallying. So that's a clue to it. You can participate in that if you want to.
Yeah, these are once in a lifetime moves for the prepared. This will pass.
You see something similar, you know, once every year or once every 2 years. I mean,
the other thing I was buying QQQ along with my Google and MasterCard.
Yeah. Correlations are so high right now that you don't even have to pick stocks. You can just buy.
I agree. I like indexes into these meltdowns. So QQQ, Google, MasterCard. Okay, but be careful. Like these bounces could be short-lived. It's going to be pretty violent.
Absolutely. I mean, we can see 4 or 5% moves on a daily basis, and garnished with gaps. So it's definitely not easy, but this market environment is creating good opportunities for investors and traders of various timeframes, for intraday, for swing, for long-term investors. Pullbacks market corrections create amazing opportunities. So there's nothing to be afraid of. I mean, it's easy coming from someone who, you know, went to almost cash before the correction, but this will eventually be an amazing buying opportunity. So,
yeah. Okay. All right. Price over psychology, right? It's already probably had its big correction. Now it's a question of how long it takes for the psychology to calm or catch up with the panic. And, you know, what'll happen if that was a bottom, and if that was a bottom like 2018, December, you'll, in 3 months, you'll look back at some of these stocks and go, why did they go up? Even though and because the price moved quicker than the psychology, and it'll happen on the same way up. But there's no rush. Like, there'll be new bases, there'll be new leaders. This changes the world in some level. China's going to lose even more trust, no matter what. This just is going to push people further away from China in terms of, moving, to Eastern Asia for manufacturing, et cetera. So, I think China is the big loser. It's a big enough market for themselves, but I think China's kind of a big loser coming out of this. India may be a big gainer, but let's see we'll check in next week. Have a good week, Ivan.
All right, you too, Howard.
Okay.
Cheers.